Welcome to Smart Credit with Sangeeta. Now, this is my part 2 of my Smart Credit classes of CGTMSE Masterclass. If you have not watched your part 1 yet, pause this video here and start there. It builds the foundation and you will need for this session. Until you are not clear about the part first, you will not be able to understand this part. So, I request you to pause it here and go back to part 1 and watch it and then get back to this part. So, let's start. CGTMSE annual fee and guaranteed renewal explained simply. Okay. One of the biggest misconception about CGMSE is that you pay only one time fee and you are done. No, it's not true. It is very important to understand this very clearly that CGTMSE works on an annual guarantee fee, that is AGF, that must be paid every year until the tenure of your loan. Suppose say if your working capital is for, you renew it every year, and from past 20 years your account is covered under CGTMSE, you need to pay for complete 20 years. You have been paying this AGF and you know that, right? Now here's a catch. AGF is charged on the guaranteed amount for the first year, I told you in my first part, okay, and on the outstanding amount for the remaining tenure of the credit facilities as per structure of the guarantees approved, okay, or renewed. So if you are, suppose say your limit was 2 crore and now you have seeked enhancement of say 5 crore. So earlier your AGF was for 2 crore and now it will be charged on 5 crore. Okay, now you can think of it like an insurance premium that protects your loan from risk. As long as you renew it annually, your protection will stay alive. So let's understand AGF. How is it charged? So let's for 0 to 10 lakh we have discussed in the previous part, but here's a detailed review. 0 to 10 lakh is 0.37, 10 to 50 is 0.55, and then 8 to 10 crore it's 1.20. Basically I already told you it varies from 0.37 to 1.20 being the maximum. AGF will be charged on the guaranteed amount for the first year, already told, on the outstanding amount on the remaining tenure. The standard rate is across all, including trading, whether it is your trading or manufacturing activity. Now this is same for everyone. Okay. Now this fee is calculated on your outstanding loan amount each year. Okay. Now when the first year AGF is paid, your bank will register your loan under CGTMSE, and then the cover must be renewed annually until the tenure of your loan, or until your loan is fully repaid. Suppose you have taken loan for 7 years but you are closing it in 3 years, then you need to pay CGTMSE fee for 3 years only. Now in addition to above, there are following categories that has been identified for additional concession relaxation the guarantee fee. The details are here. So if you are a woman entrepreneur or SC/ST or person with disability or maybe transgender entrepreneur, you will be given a discount of 10% by CGTMSE. Guarantees to the MSME promoted by Agniveers also get 10% relaxation in their annual guarantee fee every year. In case of PWD, you require to obtain that certificate, disability certificate, and you need to submit it to the to your lender, and they will submit it to CGTMSE. And now if your unit is in northeastern region, including even Sikkim, and your loan is up to 50 lakh, you will be given additional discount of 10%. Okay, and if you are JDD certified MSMEs, you will be getting additional discount of 10%. An MSME that will fall in all three. Suppose they are Agniveer and they are MSME, women, or say SC/ST, and their unit is also located in northeast region, they will get maximum discount of 30%. All 10 it's 30%. Okay. Now how the fee is handled. The AGF is technically paid by your lending institution, your bank, your NBFC, your fintech, anyway, to the trust. They directly pay it, but but that the fee is recovered from the borrower through the loan agreement. The loan agreement you sign in your sanction letter, if you receive, if you have noticed, there is a line CGTMSE annual guarantee fee applicable bill as per guidelines will be charged to you. Now this ensures your lender is renewing your coverage every year. As per latest guidelines, AGF will be paid to the trust by the institution, okay, availing the guarantee within 30 days from the date of first disbursement of credit facility. Okay, and there is also that if the AGF at a specific rate on pro rata basis for the first year, suppose you say that my loan I will repay in after 6 months, but the CGTMSE will charge it on the pro rata basis for the first year and the last year, because if you have taken loan in November but in February again it is due your CGTMSE renewal, so they will charge on pro rata basis from November to March, because on February they will generate the AGF. AGF so demanded would be paid by MLI on or before 30th March. It is generated on second week of February but is paid by the lending institution by 30th of March every year, or sometimes the date can be changed depending on the CGTMSE. Now, annual guarantee fee or annual fee once paid by the lending institution is non-refundable, but under some circumstances like your bank has excessively remitted or they have asked for excess remittance, then it can be refunded. If remittance made more than once against the same credit application, it happens many times, so then also they will refund your excess remittance. Annual guarantee fee or an annual service, if it is not due, suppose you have paid for more than 1 year, then also they can refund. And if annual guarantee is paid in advance but your application is not approved for guarantee cover under this scheme, then also you are eligible for refund. In case of pre-closure or request for refund of proportionate annual guarantee will be allowed only when the closure is marked in CGTMSE system. Refund request should be within 3 months from the date of receipt of fee by CGTMSE. Suppose your fee is due in March, you have paid in March, in April or say in May or June you come to bank and you say no, I want to close my loan. You just give an application, you pay the amount and your loan is closed. You can demand your fee for the remaining year from the bank by giving them application. Bank has to just mark your application, your loan closed in the CGTMSE portal, and then they will refund you the proportionate amount, say from April next say if you have closed in April, from May to next year March. But here is a condition, is a catch, that you must submit the application from the 3 months, means if the fee charge in March, then you have to submit the application by June. Clear? Now to claim the refund in case of pre-closure, it is mandatory to mark closure. I already told you. Any pre-closure marked or refund request after 3 months from the date of receipt of fee by CGTMSE will not be considered. Suppose you close your loan in July and your fee is debited in March, you cannot claim for refund. Now let's understand the claim settlement process. In case of genuine default after due diligence, the lender can file a claim online. The trust will pay 75% of the guaranteeing amount on preferring of eligible claim by the lending institution within 30 days. Once the bank mark your account NPA, the trust will give 75% of your eligible claim within 30 days, and the remaining 25% is given after 3 years from the settlement of your first claim, or say OTS, whichever will be earlier. This keeps the bank secure and encourages them to continue lending to new MSMEs without collateral. Now, the lending institution can invoke your guarantee in respect of credit facility within a maximum period of 3 years from the NPA date, or lock-in period, whichever is later, if the following conditions are satisfied. Please note that the guarantee in respect of that credit facility was in force at the time account turning NPA. Your CG PAN was valid when your account turned NPA. Okay, the lock-in period 18 months or 18 months was qualified from the date of last disbursement of the loans. Say your loan was 18 months priorly disbursed. Okay, then only your guarantee will be settled. if it is default before 18 months, CGTMSE will not pay any amount to your bank. The amount due and payable to the lending institution, the credit facility is not been paid and dues are classified by the lending institution as NPA. Basically, your account should be NPA, but not before 18 months of last disbursement. And yes, the credit facility has been recalled and the recovery proceedings have been initiated under SURFACE Act. That is mandatory now. Always note that the account classified by the lending institution as, say, if you have done anything fraud or willful default, or you are non-cooperative borrower, you are not eligible for claim settlement. CGTMSE will, if your institution has marked you as fraud, willful defaulter, or non-cooperative borrower, then CGTMSE will never give you the claim. Your account slipping to NPA within 90 days from the material date shall not be considered eligible for claim. Okay. Now let's move to the most important part of this video: hybrid CGTMSE cover and Udaan Portal. So until recently, CGTMSE has one golden rule: loans had to be completely unsecured to qualify for coverage. Now that worked well for micro and small borrowers, but as they grew in size from micro to small, this rule started limiting both banks and MSMEs. Now this new CGTMSE framework changes forever. Now let's explore the innovation that have revolutionized this collateral-free lending, that is the hybrid CGTMSE cover and the Udaan Portal. Let's understand both step by step. So let's start with hybrid CGTMSE cover. So in simple terms, hybrid covers allows, first understand hybrid. Hybrid means you have a security, okay, you have a security and the remaining part is CGTMSE. Partial hybrid, partial CGTMSE, okay. Now in simple terms, hybrid cover allows bank to use both collateral and CGTMSE guarantee for same loan. Okay. Earlier, if an MSME offered even a small property or machinery security, the loan became ineligible for CGTMSE. Yes. But now the secured part stays backed by the collateral, while the unsecured balance receives CGTMSE protection. I hope I'm clear, but let's take an example. I'll tell you through an example. Say a manufacturer X needs funding of 8 crore, total 8 crore, but he has collateral of 3 crore and he can apply for the CGTMSE loan for 5 crore. So in total, he will get funding for 8 crore now. And most important part, he have to pay the CGTMSE fee only on 5 crore, while his 3 crore is collateral backed now. So he need not pay any AGF on 3 crore, he will only be paying AGF on 5 crore. Now, if the borrower pays well, everyone wins. If he defaults, suppose, the bank will recover from the collateral first and then receive the reimbursement from CGTMSE for this 5 crore. This hybrid model gives lender flexibility and entrepreneur confidence. Now, it bridges the gap between fully secured and fully unsecured lending. This is a realistic middle path for India's growing MSMEs. So let's next understand Udaan Portal, the most important, most fascinating. I liked it very much. So let's start with this. This is the second big reform in digital lending. I already told. This is the launch of Udaan Portal, CGTMSE new online platform. Earlier, everything, application, renewal, even claim tracking was manual or through multiple bank systems. Now Udaan connects bank, NBFC and the borrower in a single real-time dashboard. Now through Udaan, borrowers can self-register for new loans instantly through their mobile number logins, and subject to their account was never NPA and not overdue. NPA and overdue, I already told your account should not be NPA nor overdue. You can, if it is not, you can directly apply through Udaan Portal, and the login is very simple. You can just write your you can log in through your mobile number. Okay, then you can upload the document in real time uh, just you have to give you access to Udaan portal so that they can check in the digitally through AI your all the thing that everything is matches. Basically they will do your due diligence part, and then you can apply to different MLIs. The 218 all you can apply in anyone, you can track your application there. If suppose you don't receive response from one bank, there is a good news that you can also apply to the other bank, yes, in the same portal, until you hear from the any of the bank. Now this is fully transparent, there is no confusion, no dependency, and no middle manage involved. You can yourself check. Okay, now these two reforms, hybrid cover and Udaan portal, they mark the future of MSME credit in India. Together, they make lending more transparent for borrowers, safe for banks, and a smarter economy. Message is clear: India's credit system is moving from paperwork to partnership, from collateral based control to confidence based collaboration. Now, let's understand some real stories of MSME. Policies create framework, but people create stories, right? Let's bring the CGTMSE system to life with, I'll share two stories, real life stories. These are composite stories drawn from real patterns I have seen as a banker and advisor. They both are proof that awareness and preparation changes everything. So let's go with the case one, the precision manufacturer. He applied for 9 crore loan under CGTMSE hybrid cover. This is Ravi, a second generation engineer from Pune. He runs a precision auto parts manufacturing unit. Strong order book, good turnover but limited asset. In 2025, he planned to expand by investing in new CNC production line worth rupees 9 crore. His banker told him, Ravi, you don't have enough collateral. And that's when Ravi discovered about the most important, the hybrid CGTMSE cover. He pledged his factory and machinery worth rupees 3 crore as security, and the remaining 6 crore he asked bank to cover under CGTMSE, and the loan was sanctioned within 30 days. And this all happened through Udaan portal. He himself applied through Udaan portal, and his guarantee approval number, that is CGPAN, was generated. Ravi paid his annual guarantee fee, and and it was covered under CGTMSE. And within 18 months, his sales doubled. He hired 40 new employees, and now his banker used this case as an example of responsible borrowing. Now, this is how policy and professionals come together to build the growth. Hybrid cover helps sustainable MSMEs scale beyond collateral limits safely and sustainably. Now, I'll discuss with you case number 2, that is the young service entrepreneur. Now meet Nisha, a 29-year-old digital marketing consultant from Ahmedabad. Her business was growing fast, but she needed 1 crore to hire talent and open a small creative studio. She had no property, no fixed assets. She has invoices, client, and a clear vision. Now, through her NBFC lender, she applied for full CGTMSE cover and on the Udaan portal, and the system. Once she applied in her NBFC, her fees was given to her, and she paid. And within 10 days, she received the loan amount. No mortgage was required, no guarantor, just transparency and trust between the NBFC and Nisha. And 1 year later, her turnover tripled, and she is now mentoring other women entrepreneurs to apply through CGTMSE instead of informal finance. Now, these two stories carry one message clear. When you know your options, you can change your outcomes. If you don't know, then no one can help you. CGTMSE is not charity. It's the tool of empowerment, and when entrepreneurs use it wisely, it becomes a multiplier of innovation and confidence. One important thing, in India, entrepreneurs often get confused between three major MSME support, that is Mudra, NSIG, and CGTMSE. They sound similar but serve completely different purposes. Let's understand the difference one and for all. First is Mudra. This provides refinance for micro business loans. The limit is 10 lakh, no collateral needed, best for small trade and service provider. Then comes NSIC. This facilitates finance and raw material support. This is limit is up to 10 crore, depends on banks. This is best for established MSME with supply chain focus. Next is CGTMSE. This offers credit guarantee for collateral free loans up to 10 crore. No collateral needed, viable for MSMEs lacking proper security. So always remember, already told Mudra is for micro level startups and self-employed units. NSIC helps vendor registration, tender support and raw materials credit. And now our CGTMSE is the backbone for collateral-free business loans through banks and NBFCs. Now, if Mudra is the entry gate, CGTMSE is the highway, the route that takes you to real scalability. So, now you have understood all this. Let's move further. Before we close, how to make the most of CGTMSE. 5 smart creatives I want every entrepreneur to remember. Most important, know your scheme, whether it is CGTMSE, NSE, NSIC, Mudra loan, Startup India, anything. It is important for you to know the scheme. Mention, if you are applying for CGTMSE, mention it explicitly on your loan application. An informed borrower always gets faster results. And ensure your CG plan is renewed on time, your AGF fees is given on time. One missed renewal and your coverage is cancelled and it will again start. Say, suppose if you missed your third installment AGF, your bank forgot and you remembered in the fourth, and when this renews, your new guarantee will start, and the 18 months which you have already covered, the cushion period, it will again start. So it's your also responsibility to check for it. Number third is, don't inflate projection. Bank prefer real than optimistic projections. So overstated numbers always raises red flags. Always maintain your transparency, share your GST returns, bank statement and business performance regularly. A transparent borrower always builds credibility. Use your funds wisely. CGTMSE protects your loan, but never misuse it. Use your capital strictly to protect your promise. That's how trust always compounds, right? Now, when you combine this government support with financial discipline, magic happens. CGTMSE is not a shortcut. It's a system that rewards responsibility, and those who master this system, they just don't borrow, they build legacies. Now, every MSMEs, every MSMEs begin with courage, okay? The courage to dream, to risk, to start, but courage alone is not enough. You need clarity, structure, and a system that believes in you. The CGTMSE is not just a policy. It's a proof that when entrepreneur and bank work with trust, progress follows. It says you may not have property, but you have potential, and that's worth supporting. If you have watched this far, it means you care, right? Not just about funding, but about building a future rooted in knowledge and ethics. That makes you part of a new generation conscious entrepreneur. So here's my invitation. Start your CGTMSE journey today. Speak to your bank, prepare your project report, and apply the right way. And if this masterclass helped you understand collateral-free lending better, please hit the subscribe, share this with one MSME owner, and tell me in comments what you want me to start next. Maybe PMEGP or Startup India funding. Because when you understand finance, you just don't grow your business. You grow with your confidence. Thank you for staying by.